The only reason I'm rich is because I know when I'm wrong. I basically have survived by recognizing my mistakes. George Soros, and like him or hate him, I am on the back end of that. He is a brilliant trader. He has, of course, crippled economies and continues to do all of his various deeds, but he makes an extremely good point, and that is the reason I quote him on this. He has survived because he knows when he's wrong. When you are wrong in a trade, when you are wrong in a decision-making process, two things need to occur. You need to act, and you need to record that. You record it on your trade worksheet, on your daily market worksheet, on your weekly market worksheet. So you keep all of those things because they become your trader's almanac. They are what you need to help you remember your lessons in the future. Because the dumbest thing you can do is keep repeating your mistakes. Now, I'm going to try to keep it to 15 minutes at the most today. I've been getting long-winded lately. Y'all got to forgive me. I do love this stuff, and I can't talk enough about it. So we're going to try to do it faster and more streamlined today. What do we see going on with the S&P 500? Up for the day, just barely 0.04%. Look at the weakening we see. We saw weakening at the end of last week. That, of course, was the week ending Friday, the 12th of June. We see a red spinning top. That is a solid red, which, of course, is a down, that is down momentum. Whereas an open box red is like an open box green. It just shows us a slowing down in the upward momentum, a great deal of it. But look at the price percent oscillator, still going up, but that price is sitting right there on the weekly trend line. Now again, as long as that price percent oscillator keeps heading up, it gives us a good feeling, derivative, and it's heading up nicely. It's not even flat. I mean, it looks like it's getting ready. It's already penetrated so far this week. Now it's subject to change still. You still have Friday. It's pushed through the 50-period moving average line, trying to push through the 200-period moving average line. Those are important. When those things occur, we mark that down. We note all the stuff on this chart. Everything's on the chart for a reason, because we can use those as indicators of, again, continuing price momentum or not continuing price momentum. That is deceleration versus acceleration, or stalling, sometimes we'll call it, if it's not moving in the right direction. That is the direction of the weekly vertical crossover. We go to the 2-day chart. Now, the prior 2-day candle representing Monday, Tuesday was a red down candle. This latest candle is a green up candle, but look at that price percent oscillator getting closer and closer to the red signal line. Derivative oscillator losing upward momentum. So we'll continue to watch. If we have that crossover going down on that 2-day, then that would only happen on Monday. Why? Because it's a 2-day candle. Won't happen on Friday. Might happen on Monday. 195-minute chart, or what we call now the half day. For all the engineers, yay, we have converted over from the 4-hour, which it never was, to the 195-minute chart. And again, we're using the actual live TC2000 charts. So what do we see now? Well, we saw things top all the way back on Tuesday the 16th and really slide sideways and down a little bit. Price percent oscillator just won't cross over yet, going up. Derivative oscillator gaining upward momentum. So continue to watch. Pay close attention to what's going on the weekly and that 2-day if we have a crossover that starts setting up on Friday and Monday. What about QQQ, which is the NASDAQ 100? What do we see there? Man, has this not been beautiful to us? Had our jumping in point somewhere around the 215 mark and moved up to a high of 238.74 in 1, 2, 3, 4, 5, 6 weeks. Now it slowed down this week. Price is right there on the 1-week trend line. It is just below the 2-day trend line, but that price percent oscillator still rocketing up. Derivative oscillator losing some momentum, not extreme loss of momentum. Look at the 2-day. Same thing we see on the S&P 500. It's weak. Derivative oscillator losing momentum, but look, it's pushed through the old 2-day trend line. So it's interesting. We will continue to watch, see what there is to see there. Half-day chart popped up on the afternoon on Wednesday, and really just sliding sideways on Thursday, again up 0.27%. Now that's substantially more than the 0.04% of the S&P 500, but nonetheless they're not huge moves up for the day. We go on to TLT 20-year bonds, pretty big move up, 1.06%. What do we see there? We see a green open box spinning top. The first open box green candle we've seen in 1, 2, 3, 4, 5, 6, 7 weeks. And again, sitting right there on the weekly and the 2-day downtrend lines, trying to push through. Price percent oscillator, nonetheless, still heading down, is pushed through the 50-period moving average line 2-day chart. What do we see there? Well, we see, and again, this is a completed 2-day candle, red spinning top. Things popped up on Friday. That represented Thursday and Friday of last week, the 11th and 12th of June. Then a red spinning top Monday, Tuesday, and now we have almost a doji. So again, lots of indecision, tending down, but we see that price percent oscillator still negative. It is trying to head up. Derivative oscillator negative, losing downward momentum. So continuing to watch to see if that 2-day chart is going to bounce on down or crossover going up. We see the 4-hour bouncing off the red signal line and actually heading up in the morning and afternoon, sitting right there on the 2-day and the weekly trend lines. So we'll continue to watch, see how bonds sort themselves out. If you see that crossover going up on the 2-day, then of course you're forced, if you've not already, and again, the bond trade was beautiful. I mean, back when we had, let's see, on the weekly chart, you can see it even more. When it touched its bottom back at a low of 153, a jumping in point somewhere around 164. So in just 2 weeks, it gave us that beauty. It has been riding up since then. So again, a number of folks might tell you it's past time to be out of that. Now, again, maybe it's going to bounce though. You'll see if you're still in it, or if you trifurcated, maybe you're pull out. Oh, and profit and loss bands. That is a special training we have in today's show notes. If you're not a subscriber, you won't get it. You need to subscribe for free at chartingwealth.com. Just sign up. You'll get our email every day. It'll include our video, all our great show notes with PDFs of the daily market worksheet, weekly market worksheet, trade worksheet, everything you need, plus access to buy our book to find out about Accelerated Market Mastery, the course that we're about to start teaching, again, for the folks who are really serious and want to accelerate their learning. Now we go to gold. Gold, I'm glad to see down for the day. Not a lot, 0.20 is the way it ended up. And what do we see going on the weekly chart? Again, I really want to see this thing accelerate and pull away. We do see it that the derivative oscillator's gone negative. Price percent oscillator is negative. It crossed over all the way back on June the 5th, that first week in June, but has just slid sideways. Indecision on both these candlesticks. Price percent oscillator is negative, derivative oscillator is negative, but man, it's weak. Look at the 2-day chart. It's trying to push through that. It's already gone through. Well, it went through prior to the weekly vertical crossover, the 50 period. It's trying to go through the 200 period. It's good to see it's trying to do that. But we see on the 2-day chart a green spinning top, indecision tending up, really a lot more of a wick on top than on the bottom. But the price percent oscillator is heading down, derivative oscillator is negative, losing downward momentum. Half-day chart trying to cross over, going down. Would like to see that happen, and would like to see it accelerate down so we can get our puts to be super successful and close those trades, or ride them out even longer for more profit. Hope that you are practice trading gold. Hope you're practice trading all the things that offer themselves up. That's where we are as we end the day on Thursday with our 4 big charts. Don't forget, still have, for those of you interested, Bitcoin, real estate, and black gold, that is oil USO. We'll get to those in just a minute. Hadn't taken the training or hadn't signed up to get considered to take the training which is the Accelerated Market Mastery course, then you need to email us, cw@chartingwealth.com. Also have the second edition of the books available for sale. See the links in the show notes to both these important things. Move on to Bitcoin, up for the day, barely, just a little bit, 0.20%. We see that it closed at $9,413.19. Of course, it hit a high back on the week ending the 8th of May of $9,978. So it's really been sliding sideways. We have a red down candle forming. Price percent oscillator is about flat. Again, derivative oscillators positive but losing upward momentum. 2-day chart has crossed over and crossed over even more going down. Now we did have a little green candle, this latest one, but again, we see the acceleration of the price percent oscillator away from the red signal line, plus the derivative oscillator going -2. Go to the 4-hour chart. It's just flat. It's been flat. It has been sliding sideways since it bottomed back on the latest bottom, back on the 15th, Monday the 15th of June. Popped up on Tuesday and then sliding sideways Wednesday and Thursday. So again, continue to watch, see what there is to see there. That 2-day chart's going to need to recross going up before you'll have a chance on an up move. That may occur, or you may have that weekly chart cross back over going down. Let's go to real estate. That is a Vanguard Real Estate Investment Trust Exchange Traded Fund. We always start with the weekly chart. Of course, it crossed over, going up back on Friday the 29th of May, the week ending then. Up nicely for 2 weeks, and then this week, big red doji, long wick on the top, little wick on the bottom, and we see the derivative oscillator still gaining upward momentum. That price percent oscillator lost some of its steam, but it's still heading up. Go to the 2-day. We can see it's flat, weakening. It popped up to a high, its latest high, back on Monday afternoon. I'm sorry, Monday, Tuesday. No. Wait a second. Let's make sure we got... Yes, Monday. Forgive me, because I knew this latest candle was Tuesday. This was Friday, Monday of the prior week, and that's where it popped up to its high of $86.80, and then dropped really like a stone Thursday, Friday of that week, and then so far this week is really sliding sideways, trying to move up, but not making a lot of success there. And we can see how that 4-hour chart just won't cross over going up. So again, real estate struggling as one would think. What about oil? Oil's the big gainer for the day, 2.24%. And of course on that weekly chart, what do we have? We've got a red doji, lots of indecision, tending down, derivative oscillator gaining upward momentum, price percent oscillator closer and closer to crossing over going up. This has really just been a really weak sideways slide. And again, I told you guys before, I don't like oil when it comes to our charts. Look at it. It's just sloppy, a sloppy price percent oscillator. But you guys ask for it, so I'm giving it to you, and you're going to see how sloppy it is. That's why I don't track oil except because you ask for it. So we'll see if this crossover works. Problem is when you have sloppy charts, you don't have nice, clean crossovers because you compare that to, I don't know, that. It's a lot better. Or that. See how when it crosses over going down, it gives you an opportunity, and gives you an opportunity when it bounds off, and gives you great opportunities of jumping in, jumping out. So again, better than that. Anyway, that's what we're looking at. We go to the 2-day. It crossed over. Again, went up some and sideways some. Just waiting to see, again, if that weekly's going to cross over. 4 hours trying to cross over, going up. That's where we are, folks. Again, Friday, remember, to close the market on Friday, what do? We bring you the comprehensive review and forecast. Don't ever miss that. And if you only fill out one worksheet for the week, besides, of course, your trade worksheet, you should always fill out when you do practice trades, the most important thing you can do. But fill out that weekly market worksheet and get a feel for writing those things down and understanding what you're writing down and why and what it means. If you want to accelerate your learning, That is one quick, easy, inexpensive way to do it. The other way to do it, take the Accelerated Market Mastery course. I interview everyone personally and approve them for it. I want to make sure it's what you need. Otherwise, we'll encourage you to just keep on with your daily work. That's where we are, folks. God bless. All the best from the whole team at Charting Wealth World Headquarters.